Thank you for tuning in to our latest edition of the Market Outlook, joined by George Kaufman, financial advisor, and our Chief Investment Officer, Jeremiah Riethmiller. A lot going on in the market, but not a lot, right? So the market's been relatively sideways. Volatility's picked up a little bit. The volatility index is approaching 20, which is more elevated levels. Big news most recently was with the Fed. I guess Warsh's first meeting as Fed chair and what expectations are going to be going forward. At the beginning of the year, rate cuts, people thought that was almost a guarantee of one or two. Now that's out the window, it seems, or so it seems, and potentially rate increases this year. And so where do things land with that, Jeremiah? What's the market's expectations for where rates are headed going forward?
Yeah, you mentioned that was kind of the big pivot. The markets have adjusted from potentially rate cuts to rate increases now at this point. Some analysts throwing out 3-4 rate increases before the end of the year. Again, in the last market video, sort of before this meeting, I described it as sort of sitting on the fence and watching the market go from rate cuts to rate increases. Potentially, we don't do anything for the rest of the year. We'll see. I mean, inflation's still a concern. We definitely have task force now. So part of that meeting is, I think there's 5 different task force that we've assigned to look at different pieces of the Fed process. Some of the other takeaways, don't expect as much forward guidance. The press conference was interesting because they asked him a number of questions that were sort of forward related, and he basically going to be a little bit more interesting as well in terms of market participants trying to pull more information out of those, but likely not getting much, as well as the notes. It'll be interesting to see when the meeting notes come out how much is removed from those and if they're slimmed down as well. But generally, rates have come down. Long rates have come down a little bit, expecting the sort of fight against inflation potentially. So we'll see what happens at the next meeting. But the takeaway was, as expected, he's not going to be as upfront with forward guidance.
The other main thing that's obviously continued to dominate the news and move markets is the conflict in Iran. George, where's the market going from here with that? Obviously, initial days there was tremendous market movement. That's petered out somewhat, but anytime there's talk of an agreement or a reneging or what have you, then the market moves very significantly on those days. Where do you see that heading from here?
Yeah, good question. We're kind of in this weird limbo right now where the Strait of Hormuz is technically open. There's this memorandum of understanding that has a ceasefire for 60 days, but there continues to be these minor flare-ups where Iran will fire at an oil tanker, the U.S. will fire on Iran, but then it'll get cleared up over the weekend. So right now it's almost like we're looking at Schrodinger's Hormuz, where it's both open and closed at the same time. And every time you look at it, it's something else. Markets have largely shrugged that off. Now, maybe in part because some of this was happening over weekends. So by the time markets opened on Monday, it had all kind of blown over. But similar to what we saw with Russia and Ukraine, as these conflicts kind of went on longer and longer, markets were able to start to bake that in, and also companies themselves were able to find other workarounds to help avoid the conflict areas. So looking forward, generally uncertainty is not looked favorably upon with markets. So if this ceasefire does become more lasting and more stable, that'll be good. Oil prices have been the main thing that have fluctuated. Understandably, that's where we see the immediate effects. But with the reopening of the Strait last week, even with some of the open-closed back and forth that we've seen recently, oil prices did drop pretty quickly, faster than a lot of people were expecting. So as long as there can be some stability and continue to have oil flow through there, it's likely that markets will continue to be resilient and not react too strongly to what's going on there.
Ultimately, the market reacts most closely to corporate earnings. That's the highest correlation to the market is corporate earnings. Jeremiah, we are about to start second quarter earnings season here very shortly. where's that going to land? First quarter was out of the park, home run across the board. Is that going to continue here in the second quarter? Is that what the market is expecting?
Yeah, market's looking for back-to-back home runs in that analogy, and maybe even a stronger home run. The 2Q earnings expectations right now are at 23% year-over-year growth. Looking for slightly better than that, even in 3Q, and a little under that, but still over 20% for fourth quarter. So earnings expectations still really strong. That's brought down forward multiples with the current sort of markets flattening out, giving back a little bit last week. Forward PEs now down around 20 from the highs of like 22 that we saw earlier in the year. So markets generally look a little bit more attractive if you believe that earnings growth expectation is that we're going to hit that. The other thing that was interesting I was looking at this morning is you take the analyst 12-month price target. So every analyst that covers a stock has a 12-month price target that they put out there. The implied return on the S&P 500 when you aggregate all of those price targets right now is 21%.
Wow.
So some very lofty and I think aggressive numbers, but as long as we keep hitting these earnings goals, it's achievable. It's just this is still twice as fast as we're used to. So it's starting to feel a little uncomfortable as you're going faster, still fast. And you're kind of waiting to hit that speed bump or some sort of issue that creates some dislocation in the markets right now.
So the takeaway from what you're saying on earnings is expect another really strong earnings season with the potential for the market to take, even another leg higher.
Yeah, and it's in sectors too that like technology, communication services that have led all of this, and even the worst sectors are looking at 10% plus earnings growth year over year for the second quarter. So even the worst sectors are growing at 10%. It seems really good. It is really good. Almost.
All right. Well, some rosy takeaways from Jeremiah and George here going into the holiday weekend. So,
the worst thing about this summer right now is going to be the hot temperatures this week. Everything else is fine.
So far, we will see. But I appreciate the takeaways from both of you on that. One thing for everyone to be mindful of: our team is doing a happy hour down the shore in Avalon at the Whitebriar. That is on Friday, July 24th. So you should see a notification from us. We would love to see you out there, especially if you're already down on the shore points on the Jersey Shore. So please feel free to stop by. We'd love to see you. Any questions, please feel free to reach out or call. Thank you for watching.